and welcome to another episode of our From the Helm series, live here on the beautiful Gold Coast at the Resources Rising Stars Conference for 2025. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group. FireFly Metals is advancing the Green Bay Copper Gold project and the high-grade Pickle Crow Gold project in Canada. To discuss the company's outlook, I'm so thrilled to be joined by the company's Executive Director, Mike Naylor. Mike, thanks so much for joining us today.
Thanks for having us, Grady.
So for some of our investors who may not be familiar with the FireFly Metals story, can you give us a quick overview of what the company does?
Sure, we've got a world-class deposit, copper gold deposit in our flagship Green Bay Copper Gold project. It's got 60 million tonnes at a very high grade, 2% copper equivalent. We've got 8 drill rigs going. We're in a fantastic jurisdiction and we're certainly advancing it very quickly.
And that's exactly where you want to be right now. Copper and gold are both on a run. So no wonder investors are really excited about what you're up to. Now, what are your key growth objectives for Green Bay at the moment, the Copper Gold project over the next 12 months?
Yeah, so we're really active, and where we've come from, drilling zero rigs going, and now we've got 8 drill rigs dedicated to A, resource growth, B, infill drilling, which will be the genesis of the study. And we've also got 2 rigs going on a regional prospectivity, which we know that we've got 8 known mines around our main Ming mine, and that's going to yield some really good results, which it already has.
So what grades are you seeing right now looking at the results you're getting out of those 8 drill rigs?
So we've got 2 distinct styles of mineralisation. We've got a high-grade VMS system that goes anywhere between 7 and 12%, and really good true thicknesses between 10 and 20 metres. And then we've got a broad stockwork zone that's 200 metres wide by 200 metres thick and strikes over 2 kilometres.
Wow.
So it's a massive ore body of which, that's the genesis of what we're drilling out at the moment.
Yeah, so what's the exploration strategy and how many rigs do you have turning? I know you just mentioned 8, so is that going to increase, or seems like a lot to be going at once?
Yeah, it's probably one of the most active drill campaigns in North America at the moment. So we've got 4 drill rigs concentrating on infill drilling, which will be, once again, getting that measured and indicated up to a level that we can create a study that's really robust. Yeah. We've got 2 that's growing the resource. Our last resource update, we increased the resource by 51% from 40 to 60 million tonnes. We're drilling down plunge at that, and we expect resource growth, probably not at that level, but we're certainly going to see it grow. Wow. And then once again, the regional prospectivity, we put our first 2 holes down on a regional campaign under an old mine, and we got 10 metres at 6% copper and 12 metres at 4% copper. So that regional prospectivity, particularly around those VMS systems, they occur in clusters. Yeah. So we have a pretty aggressive exploration strategy going at the moment.
Now, talking about how aggressive this exploration and drilling campaign is, how are you going to fund it?
Well, we're lucky enough to just completed a capital raising. So we've got $145 million in the bank at the moment. So
very healthy balance sheet.
It is. So we're really got strong support from our institutions that have followed us along the journey, from our Bellevue days right the way through to now. And that's led by BlackRock at 13%, 67% institutionalised. So for a company our size to have registered like that, and we just hit the ASX 300.
Well done.
We are really excited, really good position financially to get enough funding there to final investment decision.
Yeah, definitely. Now, a lot of recent drilling results at Green Bay, as we kind of mentioned, have come up in the same area as the Green Bay that you're looking at. Is there substantial exploration power elsewhere as well that you guys are looking at going out or outwards or anything like that?
Yeah, when we acquired the project, we only had 52 square kilometres, so it was quite a postage stamp. Shortly after, 6 months after that, we acquired another 300 square kilometres. So we've got all the regional geology that sits around the main Ming mine. Yeah. So we raised money specifically for that regional exploration where those 8 old historic mines sit, which is outside the main Ming. The nearest one's 2 kilometres away. Our first 2 drill holes that we put underneath that VMS system yielded 10 metres at 6% copper and 12 at 4% copper equivalent.
Wow.
So we're really excited by that regional, and we've dedicated 2 rigs to go there for at least 12 months to grow that regional exploration, which is super important for us.
Yeah, and what infrastructure is already at Green Bay, and how would this assist with the production start?
Yeah, we're super lucky. There's been historically $250 million invested into this mine. Wow. There's a decline going down 950 metres. There's a shaft that sits there down to 600 metres. There's admin blocks. There's a whole suite of infrastructure that sits there. And that, as an accountant, speaks to me in 2 words. It's going to save A, money when we come to starting production, and B, just the time it would take to get that infrastructure down. And then we're blessed by 2 things. We've got a port that we've got an agreement with only 5 kilometres away, which is amazing. Yeah. And we've got hydropower that runs through our tenements. And when you think about hydropower, A, it's green, and it's 6 cents a kilowatt hour.
Wow.
Compared to the WA goldfields, which is 24, 25 cents a kilowatt hour, those power costs are phenomenally low.
That is insane. Yeah, definitely. Now, copper and gold prices are naturally in the right place right now. And in this commodity cycle, what's your outlook for pricing and structure in terms of hedging versus unhedged in the FireFly kind of story?
Yeah, it's a really interesting one. I'm sort of at the cold face at the moment. You know, our study comes out in March next year, which is going to be a real catalyst for, you know, how we take this or advance this project.
Yeah.
But I'm speaking to offtake partners, I'm speaking to traders, I'm speaking to corporates, I'm speaking to smelters right now.
Yeah.
We haven't even got a study, but we're getting courted really, really quickly by these guys. It's a historic mine, so it was a very clean product.
Yeah.
So, you know, people know
it's proven,
know what's going to come out and expect to come out of this mine. But what that tells me, there's a real shortage coming, and I think the demand's there. You know, people that don't own copper, you know, want copper, and people that are copper want more copper. So I think we're in a really good spot. And when it comes to pricing, you know, unhedged, I think we're in a real fortunate place to be in a, you know, in a bull market for copper. I really feel it's coming.
Yeah, I think there's a really big upside. Which, as I mentioned in my preso this morning, there's so many tailwinds coming for the sector and a serious supply deficit. So I think all eyes will be on FireFly Metals heading forward. Mike, Naylor, thank you so much for joining us today. And I hope you enjoyed that episode of From the Helm as much as we did filming it. Keep an eye on FireFly Metals over the coming 12 months and beyond. If you did enjoy that episode, please be sure to subscribe to all of our YouTube channels.